said this before. I think the Fed to me has always been behind the curve, whether it's when they're
Yeah.
printing money when they really shouldn't be, or
Yeah.
when they're tightening out of panic because of inflation in this scenario. And I really, if I could talk directly to Jerome Powell, I would say be very careful here because now you've raised three times in a row 75 basis points. You're guiding that you're probably going to raise another 50 in November at least, maybe another 25 into December. And we haven't even seen the full effects of the higher rates yet, right? So the economy still hasn't digested all of that. And you have to be careful here because with interest rates, rising and inflation still high, if we go into a bad recession, and let's say we go into a global recession, which it looks very possible we will, how do we get out of that recession? If you think about it, every past recession, the Fed's printed us out by
Hmm.
lowering rates, quantitative easing. But with inflation at, let's say, even if it comes down to 4%, they're not going to print us out. They can't because it would send inflation soaring again. So it's a very tricky scenario. And I think the market is starting to be really nervous about that aspect.
Hello and welcome to Money Talks. In today's video, President and Chief Market Strategist at InTheMoneyStocks.com, Gareth Soloway, updates about Bitcoin's recent price run and the upcoming price movement. He also reveals what the technical charts are showing next for the stock market, US dollar, gold, silver, oil, gas, and more. Make sure to stick around till the end of this video where Gareth Soloway shares his views on the White House planning to launch the digital dollar.
So nothing's changed, unfortunately. In fact, the hawkishness of the Fed is exactly what Bitcoin doesn't need right now, and it's pushing it lower. So if I show the Bitcoin chart here, what we can see is that you've been hammering on this level over and over again. This is back in June, in late June, or excuse me, this was June, in early July, in mid-July, and then over here in September. And look at what's happening on this candle today off the Fed. It looks like we're starting to break lower. Now we will have a little support at the June low of 17,500, but if that gets broken, then there's not a lot of support until you get to like 13 to 12,000. And I think it's looking more and more like that is going to be the ultimate outcome here.
Bitcoin was sliding after a surprisingly strong performance on Thursday, a 5.1% gain that was the largest cryptocurrency's best single-day return in 2 weeks. Bitcoin continues to display strong resilience in the face of a broader risk-averse mood in financial markets. Given it is the ultimate risk asset, this is quite surprising and perhaps even encouraging.
The question is, how long does it take to get regulation out there where institutions start to feel comfortable investing in it? So there's always going to be this need and this trust that Bitcoin, there's a run of 21 million. And so therefore, it's not the fiat currency that is the US dollar, is the yen or the euro or any of these other currencies that the governments can just print nonstop when they want to stimulate. And so I think you have to look at it like that. And you have enough big money, the Michael Saylors and a bunch of other players that have drawn enough attention to it. And then you have countries like El Salvador that have adopted it as kind of a currency there. I do think that it will survive, but it's going through its dot-com bear market, right? So if we think back to the dot-coms, you had the Amazons of the world. That stock went from basically 112 to about, I think it was about $6 or so. So a 95% drop. And it's very likely that we're going to see that on Bitcoin. The fact that people are saying they're beginning to say, oh, it's not going to be in existence anymore. That's exactly what I want to start to hear to believe that we're close to a bottom. I don't think we're at the bottom yet, but when you hear more and more people saying that, because by the way, they said that in 2018 as well, after the highs in 2017, it was 20,000, it went down to 3,500, and you had tons of people saying, oh, forget about it, it's old, it's done. And then what happens? It goes to 69,000. So you look for those contrarian indicators. And again, the belief is there's enough young people, especially, that understand the fiat currency issues out there. And they are into the digital age now, where they're not just looking at gold, but they're looking at these other currencies, essentially cryptos.
Traditional markets were reeling Friday from signs that there's no easy fix for the global economic challenges, with activity slowing or possibly even contracting, inflation still persistent, and central bankers ratcheting monetary conditions tighter. The UK pound tumbled as the government announced a plan to stimulate the economy through tax cuts, prompting fresh inflation warnings from economists and leading traders to bet on faster interest rate hikes by the Bank of England. The dollar surged to a new record valuation in foreign exchange markets, which is likely seen as a negative for Bitcoin because the cryptocurrency often trades in an inverse relationship to the greenback.
Yeah. So I think that's the big thing. And this was a shock to the US equity markets, is you basically got the 75 basis point hike, which everyone expected. That was not a surprise. But the statement was unbelievably hawkish, in fact, guiding the market that they're even going to continue to be aggressive into year end, basically upping where they're saying interest rates will be by year end. And that shocked the market. And this was such a wild day because that statement alone dropped the market precipitously. We saw about a 2% drop in the S&P in the matter of 20 minutes. Then Jerome Powell did his press conference. And in the press conference, he kind of was ever so slightly open to letting economic data dictate. And all of a sudden, the market just ripped higher. And we saw the markets go all the way to new highs of the day. So now we've rallied basically up 3% to the upside. Now, all of a sudden, the markets started to redigest what he's been saying. And they're like, wait a minute, we're not going this way. And the market sold off and made new lows of the day, basically dropping over 3%, ending at the lows of the day. It was a day for the ages.
The Fed's rate moves have been pushing up the dollar's value in foreign exchange markets, and now cracks are starting to appear. Japan announced its first currency intervention in more than 2 decades to shore up the yen. Meanwhile, Switzerland, Norway, and the UK all raised borrowing costs in the wake of the Fed's decision.
And that's the worry that I have, is that they're going to put themselves in this box by over tightening too quickly. By the time all of these rate hikes kind of are digested in the economy, then they're going to find out too late that they've sent us into a bad global recession. And then at that point, we're going to all look to them and say, oh, can you guys print? Oh, wait, we can't print money because inflation is still elevated at 4%, let's say. So it's a really scary scenario where we could see, in my opinion, it's very likely we'll see a protracted, like a long-term bear market that could last for 5 to 10 years. And it just could be nasty. I mean, it's a scary scenario. I think you still got to think about gold as a kind of a safety play here. We'll talk about that obviously in a little while. Yeah, so to me, it's not so much of a concern because, a digital currency is still a fiat currency in that the Fed can then just click a button, kind of like they do now, and probably just print another $1 trillion or €1 trillion or whatever. And so the allure to me for Bitcoin is that it's that digital gold. So gold is a great, awesome commodity. I own a fair amount of physical. I'm invested in it currently as an investment via the GLD. And I like it because of that aspect. It's kind of a safe haven aspect. And I think that Bitcoin is becoming more and more of that. So it's going to kind of separate itself. And then if you look at where Ethereum is and where some of these other cryptos are, they've got a big use case, right? They're being used for things, building platforms on top of platforms. And I think that's the key too, is I want to actually see Gary Gensler kind of come out with okay, these are securities. Okay, they're securities. That's fine. Make them do legitimate reporting, legitimate audits. I want to see that. That's transparency. That's a good thing. I'm not so concerned about the decentralization getting kind of taken away because they have a use case. And so to me, like an Ethereum is almost like a Google or a Apple. And I think that's what it becomes, of more of a security, while Bitcoin is more the digitalized gold. And then you have the central bank currencies, which are just created to kind of do transactions back and forth. And the government obviously still has control of that.
Even if central banks tighten monetary policy further, the situation will not worsen more, for the current performance of crypto assets is terrible enough. Ether, the second largest cryptocurrency, was gaining along with Bitcoin, up 4.5% on the day to about $1,300. The broad CoinDesk Market Index was higher, led by Algorand's Algo with a 12% gain over the last 24 hours. So, what do you think about the concept of digital dollar? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.